Hey, good morning, everybody. Happy Tuesday. It's March 15th, and I'm excited to be here today. Despite everything that's going on in the world, life goes on, and the markets have been very fascinating for the last few weeks. And the price of crude oil, fortunately, is starting to come down a bit. We're trading in the 90s. And what I'm going to be talking about today is, becoming a profitable trader and using order flow. It's always fascinating when, my wife's not into trading into the markets at all. And when she starts asking me about the markets, I know that we're in interesting times. And in today's presentation, what I'll be talking about is there's a few main points that I wanted to cover today is, how to avoid the really dumb mistakes nearly all traders make each day. Okay, and then I'm going to talk about what every trader needs to know about order flow trading. And lastly, I'll be talking about order flow strategies that you can quickly and easily master to become a more proficient trader. Because, at the end of the day, I talk to other traders, especially people that are, I don't want to say new to trading, but have been struggling in their trading. And something that there's common denominators, right? And one of the things that I've realized is people like to overcomplicate things, right? Trading doesn't have to be so complicated, and especially when people start thinking about order flow, since it's kind of a new concept for people, everyone is just so used to looking at a bar chart that they think that when they got to look at things like the volume that's being traded, like, oh my gosh, I don't have the mental capacity, or I just don't have the time to do that. And it's really not that difficult. Now, for those of you that are new to one of my presentations, I just want to talk briefly about who I am, just so you understand where I'm coming from and where the information that I'll be teaching you today, where I learned that from. So again, my name is Michael Valtos, and I've got over 25 years of professional trading experience. And I started on the CME floor, the Chicago Mercantile Exchange, back in the early 1990s with Dean Witter Reynolds. I literally started at the bottom of the business as a runner, okay? And that is how people would get started in the business oftentimes that didn't have straight A's or graduating at the top of their class that would be, selected to go work at a Goldman Sachs or something like that. I literally worked my way up, right? I had to climb the corporate ladder, so to speak. After a few years on the floor, I joined EDF Man, the big English trading company that's been around for, over 200 and almost 50 years now, as on their global macro trading desk in Chicago. After that, I joined Commerce Bank in Chicago again, as I'm a futures guy. I trade futures. Being from Chicago, if I was from New York, I'd probably have traded stocks. But futures are a great instrument. I became a licensed Eurex trader at Commerce Bank. I was one of only a handful of people in Chicago at the time in the early 90s, late 90s, early 2000s, that was able to trade Eurex directly with the exchange as opposed to having to go through a broker. After Commerce Bank, I joined Cargill, right, the big U.S. commodity trading firm. I spent 4 years there as head of the futures trading desk, and eventually they sent me out to Singapore to set up another trading desk. After my 4 years at Cargill, I took some time off. Then I joined J.P. Morgan in Singapore, and I spent about 8 years there as vice president of futures trading. Then after I got married, had a kid, I decided, I don't want to. I know how to trade, but I don't want to be doing this, coming in at 6 in the morning, staying there till 5 at night every day. As I felt like I was going to, you know, basically kill myself. So I said, there's more to life than, working at a bank and, answering to a boss. That's what trading gives you. Trading gives you freedom. It gives you that ability to say, you know what, I could do this on my own, and I left. And I started up orderflows.com in 2015, and we're going on our 7th year now. So it's very good. So all the information that you're going to be learning today, derived from all that years of experience of trading that I've gained over the years. Now, I said, in 2015, I left JP Morgan. I started up orderflows.com, and we released the Order Flows Trader. Actually, the new version, I forgot to update this slide, is Order Flows Trader 5.0. We just released it about a month ago. So you can see, we're been around for 7 years. We're already on the fifth integration of the order flows trader software, which makes analyzing the order flow very easy to do, as you're going to see in this presentation. Now, the reason I just talk about that is because, the charts and tools that I use in this training are generated from my order flow software. So, but really, I just want you to see what to look for because, a lot of people now, order flow is almost becoming mainstream. A lot of software providers do have a basic version. So I want you to see how quickly and easily you can apply order flow to your trading to make better, more informed trades. Now, if you want to take your order flow trading to another level, that's where I'm going to come in. That's where I'm going to help you. And one of the best ways to do it is to read my book that I wrote called Trading Order Flow. If you stick around to the end, I'm going to show you how you could get that for free. It's a 150-page book. It's a simple download. I'm going to show you how you can get that. So again, it's order flow is a special tool. I've helped a lot of traders over the years by showing them what to look for, but more importantly, give them the tools that they need to make trading easier, right? And you can see what people are saying, the software makes it remarkably helpful because they can clearly now see what's happening in the market, right? It's not just about looking at a chart and trying to guess, is this market going to go up or down? Now you could look inside the bar and see, is there aggressive buying? Is there aggressive selling? Is buying drying up? Is buying stopping because there's heavy volume, etc. There's so much information that order flow gives you in a chart. And remember, the more complex the methodology, the more psychological impediments develop to hinder your trading. You're going to misinterpret data, or you're going to be confused to the point that inaction becomes more likely. You're going to skip trades, say, oh, I don't know what's going on because, I've got all these different indicators. Simple and obvious is always better than complex and convoluted. Order flow is that way. Simplicity is best. Now before we begin, just a brief disclaimer, right? We're all adults in the room, right? We understand that risk capital is money that can be lost without jeopardizing our financial security or lifestyle. Only risk capital should be used for trading, okay? So basically don't trade with your rent money, so to speak. Now, there are many ways to trade the market, okay? You have technical analysis, you have fundamental analysis, you have cyclical analysis, you have order flow analysis, which is what I'll be talking about today. And again, this is not a comprehensive list of the different ways to trade markets. I know people that swear by astrology when they look at the markets. I'm not one to judge, but that's what helps them make their decisions. So be it. But order flow is the way that I trade, and it's the way that I think that if you were to add it to your trading, it's going to help you immensely. So the first thing I'll talk about is how to avoid the really dumb mistakes nearly all traders make each day. And that mistake, in my opinion, is they focus strictly on price, right? They're just looking at one thing in the market, and that is price. Well, price traded, 42.27, okay? They're now trading 42.27 and a quarter. They're just focusing on that. They're not looking at the bigger picture, right? They're not seeing where the other ships are, so to speak, right? If you look into the telescope, right, you just get you could just see that one little bit of information. Really what you need to do is take a step back and see where everything else is in the market that's happening. All right. Now, if you're not familiar with an order flow footprint chart, this is what it looks like. And you can see there's just so much information. At first, it does look intimidating because a lot of people aren't used to it. Now you could still have your candlesticks. You can see I still have candlesticks going on in here to help you understand, what is going on. But when you see what's happening in the bid and the offer, the volume that's being traded on the bid and the offer, the relationship of that trading, where the heavy volume is coming in, it's going to make your decisions a lot easier, right? You can take, candle setups that now you're able to confirm with what is happening in the market based on what is actually trading in the market and how it's trading in the market. So what makes order flow analysis different from other forms of analysis is that it's not just price, right? All these other indicators that you go through, you open up your charting software that we got 500 different indicators. So what? If they're all based off of price, they're all derivations of price. How many different ways can you cut it, right? You need to be looking at the other information, which is the volume that's traded, but not just the volume, but the volume that's traded on the bid and the volume that's traded on the offer, right? Because it's important because markets trade in a two-way auction, right? For every buyer, there is a seller, right? You can't have a trade if everyone is just sitting on the bid and nobody wants to buy from the offer, right? And nothing's going to happen. The market's going to stay there. It's when somebody crosses the bid offer, moves their bid from the current bid to the offer price to buy it from the offer, that's when you have a trade. Or when a seller goes down and hits the bid, that's when you're going to have a trade. So not all traded prices are the same, right? Different quantities trade at each price level, right? Some prices might have 30 contracts traded. Some contracts might have 2 contracts traded. Some prices might have no contracts traded, right? But you're not going to see, even if there's no contracts that are traded, you're not going to notice that in a normal bar chart. But if you're looking at a footprint chart, you're going to see that right away. So volume expresses interest and enthusiasm in the market. More importantly, it reveals conviction in the market. Remember, price alone leaves a lot to be desired, yet traders love to draw support and resistance levels based on nothing other than price. So how is that accurate, right? Well, if you take a second and you look up, what is support and resistance defined? Well, support happens when more buyers appear. Resistance is when more sellers appear, okay? You have selling interest. That's what's causing your resistance, just as you have buying interest, which causes support. It's not that you just have it trades down there and then moves up. Well, what happened when it traded down there, right? You need that volume to come in. So because of order flow analysis, traders now know that markets don't always reverse based off support and resistance levels, right? The whole concept, I see a lot of traders, posting charts everywhere online that's available. I mean, I see even on Instagram now, but you got Facebook, you got Twitter, everywhere. People love to post their charts and always, oh, this is a support level, this is a resistance level. Well, there's more than just support and resistance in the markets. There's also price rejection, okay, where traders stop trading at a price because it's too expensive, or they stop selling because it's too cheap. And if you're looking at a normal bar chart, how are you going to be able to tell, right? People will say, well, yeah, I had this wick up here and then the market sold off, so you got price rejection here. Well, do you know it's price rejection? Do you know it's support? Now, of course, that would be just splitting hairs. I mean, market is going to have the same reaction, but why didn't the market sell off here on this big wick? Why didn't the market sell off here or here or here? That's where looking at the actual order flow is going to help you as a trader, because now you can see how it traded there. Okay, so you can make a better decision where you could see what happened here, you could see what happened here, you could see what happened at any of these big tops of these big wicks, right? That would be actionable. Now, if you're looking at the order flow chart, well, it's very obvious here. If you know how to read order flow, when you get up to the top of this bar, right, there's a few bearish things, and I'm not going to make this a conversation today about delta, about imbalances, about point of control. 'Cause I want you to take away some information, right? And this is information here. So at the top of this bar, you have what's called an exhaustion print, right? You see 6 contracts traded. Now this is E-minis yesterday. Now granted, we're in a very volatile time in the market. Market's jumping around a lot, and volumes are, I don't want to say lighter, but they're more spread out, right? Volatility in the market, right? What causes volatility is the market's looking to transact its volume, right? So even though this bar's got 4,000 contracts traded, it took almost what is that? 7 handles, 42.33 all the way up to 42.40 for the trading to be done. Okay, so that's what volatility is basically the market moving to find buyers and sellers that it can transact at. But when it got up here, it got up to its swing high, right? That was, on the earlier chart, right up here, right? 42, just almost 42.40. Where was the buying, right? Because for the market to go higher, right, you need aggressive buyers. You need buyers coming in, lifting the offers. Well, you got some decent volumes up here, right? 241, 144, 184, 122, 172, 134, and 71. and then six. Six? What is that? That's like nothing. Earlier in the tops of these bars, you're getting 27, 20, 38, 38, 6, right? It just dropped off the cliff here. It went from 134, cut in half to 71. Cut that in, you know, by what is that, 80% down to 6. So there was just lack of buying. That's price rejection, also known as exhaustion, right? If you're just looking at a normal footprint chart, maybe you can see that, right? Now, the order flows chart will highlight that area to you, okay? Now, it's interesting because, when we released the order flows trader software years ago, the first versions, this is one of the tools that we had in there, and all of a sudden now most software has it, right? We're going to highlight those exhaustion prints to you. And people weren't really looking at what was happening at the edges of the bars, right? But it's very important information. Now, if you're at a swing high and you see lack of buying and you see the market reverse down, closes down, what do you think is happening? Okay, ask yourself, well, we just hit a swing high. There's lack of buying at that swing high, markets reverse. Now I know here that there's lack of buying by the exhaustion, right? People are tired of buying, right? They're rejecting these higher prices as opposed to, a market that, here's got 27, came off and rallied back up, made that new high. This high held and came off. So, it's about putting the pieces together of the market puzzle so that you can understand really what's happening in the markets. Okay, so again, E-minis yesterday. Most of these charts are from yesterday. I think I got a couple of charts from this morning. Now, oftentimes, right, you're going to see a market hit a swing high, come off, come all the way back up, come off again, right? A nice double top. Well, how do you know to sell it? Okay, I mean that's really what you want to know as a trader. Well, okay, if there's a way that I know, well, you look at the volumes. Okay, I mean it's quite simple, right? It doesn't take a lot to understand. Now, definitions of double tops. Do they have to be exactly to the tick, or can they be a tick or two? Again, for me, I'm fine as long as it's within a tick or two. Ideally, I'd love to see it exactly at the same price level. But if it's within a tick or two of the previous swing high or swing low, I'd consider that a double top. I know some people like to nitpick. So we hit this first double, not first double top, we hit our first high. Okay, you got some negative delta, minus 39. You see the volumes that traded 42 on the offer side. Come back up within a tick here. It's got 9, right? Again, volume is kind of light there. It's almost an exhaustion print. Market comes off, nice, strong negative delta, 228. Okay, then market comes back up here. You almost got this triple top here, right? 41.95 and 3/4. It trades 12. Starts coming off. Now this bar's got positive delta, but then the next bar, negative delta. Okay, next bar opens up, doesn't even trade anything on the offer side. It's a 0. So we call a 0 print. Market trades down, big negative delta. Okay, so first time you hit the highs here. Second time you came back up, selling came in. Third time you came back up, although the selling wasn't initiated on the bar on the high or the swing, the second attempt up to that double top, came in immediately on the second bar. We've got 0 here, right? I got no follow through buying coming in. Instead, what you have is this bar opens up and it's just selling, hitting the bid, hitting the bid, hitting the bid. How do I know? Because I had 0 here, right? It's telling me there was no, what do you want to call it? Cross trade, right? When the market opened up, nobody was interested in buying, lifting the offer. Everyone was just interested in selling. So you have that 0 print there. Obviously, you got the big negative delta. So what do you have? Okay, you got your high. You made your first attempt, selling came in. Second attempt, took 2 bars, but you can see the selling come in. What do you think is going to happen? Do you think the market's going to turn around and come back up? Well, we just had that selling come in. Chances are it's going to continue, right? An object in motion is going to continue in motion. What happens? That's your opportunity to get short by recognizing that lack of buying coming in here off this double top, right? Here and coming back up here. I guess this would be the third time rather, coming back up and it sells off. Now it did rally back up a bit just within a tick of this point of control from earlier. But you should just be sitting here waiting for this market to break down right here at 92. Now I know a lot of people that trade double tops, they'll take the swing low here, which is way down here, 41, 86 and a half, right? Because you hit your high, came off, went back up, and say, well, classic way to trade a double top is when you take out that in between swing low. Well, where would you rather be short, up here at 92 or down here at 86? I mean, they're both winning trades, but I'd rather be short at 92 than at 86. It gives me an extra 6 points. All right. So, you want to be focusing. If you're just focusing on price, this is where you're going to be getting short right here, the classic sense. But if you're reading the order flow, you can be getting short right in here as you're starting to break down after attempting that double top. Okay, so here we got a swing high, market sold off, went back up, sold back off, right? How do you know to sell that? Well, what's happened? Okay, when you're making that move right back up here. Well, a few things happen, right? You've got your exhaustion print here, right? People aren't interested in taking it higher, right? You're seeing 4 contracts trade up here. Well, earlier you had 27, over here you got 18, you got 83, you got 19. When you're seeing this lack of volume occurring as the market is trying to go higher, you should be thinking in the opposite, right? Well, okay, the market is rallying, but the buying is getting weaker. What do you think is going to happen? Well, eventually it's going to reverse and sell off, which it did. Okay, and the clue is just right here, just this one little number, the four contracts that trade. Well, there's just no follow through. People aren't interested in trading anymore. Okay, because how do you know that is, well, normally you're going to have volumes in double digits, 20, 30, 40, 50, 60, 80, 100, 200, 4, right, on a swing high is just like here, 9 on the swing high. It's telling you people aren't interested anymore. Okay, they're not interested in buying it anymore here. They're not interested in buying it here anymore. And again, it's not about analyzing every single tick that goes through. That's what a lot of people think of order flow. They think of those old movies, the guy sitting around the ticker tape machine, vacuum tube thing, looking at the numbers. Well, they're not analyzing every single tick. They're looking for anomalies in there that's giving them something to take a trade off of. So, sort of moving away from price is, most people think that, the price of something is its value. Okay, well, not really. Okay, just because people put a price on something doesn't mean it's worth it, right? And if you ever watch that show, American Pickers, they go around traveling the countryside, going to these old antique houses, asking if they could buy something. And then later they say, well, they put a value on it, right? And they have their imaginary profit. Well, at the end of the day, once you put a value on something, it doesn't really matter unless someone's willing to pay you that price for it, right? You may be willing to sell it, just like the whole Beanie Baby craze. I mean, there's a great show on Netflix about the Beanie Baby craze, but it's like, oh, I've got this rare Beanie Baby. I've got this rare owl Beanie Baby. It's worth $5,000. Well, it's only worth $5,000 to the person that's willing to pay it, right? You may think in your head that's what the value is, but at the end of the day, you try to sell it. I don't know. I don't think you can pawn these things. You go to the pawn shop, the guy, I'll give you $10 for it, right? That's what the value is to him, even though the value to you is, 5,000. And in trading, right, that's what we call the value area. Now, I mean, we think of value as one price, but really in trading in the markets, there's a whole value area, right, of, value area high, value area low, an upper range of the value, a lower range of the value. And it's the majority where of trading takes place is that value area. Now, oftentimes, value areas are going to overlap one bar to the next. They're not going to be jumping around. Value isn't going to move that much that quickly, right? Generally, values shift, right? Just like price of used cars has been going up for the last 2 years. They're not making these big jumps all the time. I mean, some months they may increase a lot, but gradually value has been moving higher. Okay, but when you do have moves that are significant, big jumps, do you think that's important? Hell yeah, that's important, right? That's your time that, you should have probably bought your car, before that big jump, if you can sense that it's going to move. Now, if you're looking at a normal bar chart, can you see value? No, you'd be guessing. Now, a lot of people like to look at value and say, well, we're in a sideways market, so that must be value. Yeah, okay, well, you don't know why it's in a sideways market. Volume market just be waiting for more information. It could be consolidating because, like this week we got a Fed announcement. Um, some markets tend to quiet down around certain times, and that's where balance is going to come in. But if you're looking at a footprint chart, you can start to see where value is forming by the points of control, right? Points of control in the order flow is the level where the most volume traded. Okay, so that's a crude way. But now that you're looking at the volume in the bar, well, it's very easy to see where value is traded, right? You could add the value areas to the bars. So I know that where the value is in the bar, right? And like I said, oftentimes they overlap each other, right? Like here, right? They're overlapping, and other times they gap, right? They gap. What do you think the significance of that is? I know that value is now gapping up. It's almost gapping up over, uh, well, it did gap up over the immediate, value areas here, but it's sort of gapping up over the previous value area highs over here. So do you think that's significant? Yeah, that's very significant. This is this morning when the market was trading, 41.66. I don't know where we are right now, 42 something. Okay, this is on a 5 minute chart, right? Earlier I showed you a 1 minute chart, right? This is just a 1 minute chart. Now you're a 5 minute chart, right? People always say markets are fractal, right? Whether you're looking at value on a 1 minute chart, it's going to give you that insight on the 1 minute chart. If you're looking at value areas on a 5 minute chart, it's also going to give you that value, right? This is yesterday around 10 in the morning, right? You got a gap here, value overlapped, then it starts gapping down, gap here, gap here. Well, what do you think the market's doing? Well, value is gapping lower by bars and 5 minute periods. Okay, that's significant information. One little bit of information, right? Now again, you have the swing low here, but you see, no, there's a gap here starting to move lower. Maybe I should be looking to get short up here rather than waiting for it to come all the way down here. You can get into your trade 5 points earlier rather than basic traditional analysis. Euro currency, same things, right? Gaps, gaps, gaps as the market's moving down. Now, of course, on thinner markets, you're probably going to see it's going to be a little bit more choppy, a little bit more gappy. Again, this is a euro currency 1 minute chart, but you can see as the market is going higher, gap, gap, gap. Market starts moving down, gap, 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 all on the way down. Now, the second part I want to talk about is, what everyone I think needs to know about sort of the basics of order flow trading. And I'm not talking about Delta, PLC, et cetera. I'm talking about some of the easiest things to see in the order flow. Okay, so what if I were to tell you there's an easy way to see important things happening in the order flow, to see where prices are rejected, or to see where important volume being traded, right? Because again, order flow is about analyzing the volume. And with the advent of computers, it's all about making it easier for you, the user, to trade with, right? You don't want to make trading so difficult, right? You don't want to make it so hard that you can't understand and then you're frozen. Do I buy or do I sell? You want easy, actionable things, right? And this is the rally that was there earlier, right? Sold off, rallied up here, we sold off. Okay, how do you know to sell that rally? Well, the signs are here. Price rejection, price rejection. Just this little indication right here, a little indication here. It's telling you, you know what, this move up is exhausted, just as it was over here, right? Exhaustion print, exhaustion print. These prices here are being rejected. We came back up. We're trying to make another run up to those prices. Traders are still rejecting those prices. Again, market went up, sold off. Well, why? Because traders rejected the prices up here, 42.40 yesterday. They rejected that when we were up there. Now, what else can help? I just spoke about the value areas, right? Why not add value areas to your bars? A simple little thing can really make your trading a heck of a lot easier. Okay. You have a nice gap here. What do you think that's telling you, right? Now you had a gap down, went sideways. Now you're gapping back up. This was the low yesterday here, 41, what was that, 41.52 and a quarter. Then we start gapping up, gapping up, gapping up. Now we're starting to gap down. What do you think the market is going to do? Well, it's probably going to come back down, look to test these lows. Okay. And by understanding where value areas are in bars and where they were previously, then you're going to understand why markets pull back to a certain level, right? I mean, a lot of traders, if you're just looking at a bar chart, you're sort of scratching your head. Well, you know, why does this market pull right back to this level? Now, you do have that previous point of control right here, which is also a clue. But if you're looking at the value areas, okay, we gapped up, coming back down. We're trading inside this value area, right? Market went up, sort of rejected these higher prices, came back down, trading in the value area. Now you got to watch what's going to happen. Well, a couple things. One, we can just still trade in that value area as time goes on, but that's not going to last forever. We're either going to break down or we're going to break out. Okay, and in this case, we started breaking out. And there's clues that you could be looking for that that's happening. Obviously, you can see the point of controls in each bar migrating higher. You can see the signs in the deltas as well. You can see imbalances in the bars. Okay, but as you know, if you've ever done any market profile analysis, right, you know that if we come back into value and that value holds and the market starts moving away, you can have a nice big move on your hands, and that's what happened here. And if you're looking at a normal bar chart, well, you're really going to be scratching your head, trying to guess these levels. So why does the market pull back here? Why does the market pull back here? Right? This is where looking at the order flow is going to give you those entry levels, right? Well, if you're looking at the value area, okay, well, because you have the value area of this bar, it's exposed, right? I have this area where the market can come back and test it, right? Came right back up here and tested it and then sold off, just as this one over here, right? Right before the gap down, I could sort of draw this box out coming out from here. This is the virgin, whatever you want to call it, the exposed value area or the virgin value area, right? The market came all the way back up, tested it, rejected it, and sold off, right? Just as then you left another one here, market came back up, tested it, and sold off. So it's rejecting it once, rejecting it twice. What happens? The market sells off. Okay, so simple little tools of knowing where value is in a bar, knowing where price is being rejected based off of the volume is really going to help you as a trader, right? Again, it doesn't take complex mathematical equations. Oh, what's happened at the price over the last 30 bars, and is there any divergence, convergence? Well, no, you just look and you can see, right? Well, okay, well, there's no lack of trading right up here. Okay, that's my sign. I know that buyers aren't interested in taking this market any higher. And that's an easy one, right? Where do you place your stop? Well, if I'm short off of this, my stop is just right here. Okay, because I know that if it starts coming back up there, I'm going to be wrong. All right, so that's make trading simple. Don't try to make it so complex. Now, let's talk about some strategies, okay, that you can use to become a better trader. Now, again, this is yesterday in the E-minis, right? You see the market selling off, then sort of bounces up here. It sort of looks like it's coming in. People say, "Oh, this is the hammer bar. It's very bullish." Well, okay, next bar went up, and then the market sold off a lot. Okay, so candlesticks are great when they work, but when they don't work, they don't work, right? I mean, there's been studies on them. Sort of the most candlestick patterns are successful between about 35 to 48%. The ones that have high percentages of 60%, they happen so infrequently that when they do happen, you'd probably miss it. Well, why does the market come back up here and just sort of bounces? Now we can see there's a few things in here. Okay, we can see the exhaustion prints. Okay, that's a bearish sign. Okay, but when you start adding other information, add the value areas. Well, I see I had a gap here. Okay, so I know it's bearish already. Market's starting to run on me, even though it had been running. But I know I'm in a strong downtrend, right? That signifies with these gaps. And then you start coming back up, testing that value area low of that virgin value area. Okay, and it can't go any higher. Two lots trade, two lots trade. Now, the beauty of computers can do a lot now, right? You can actually have the computers draw out these areas for you so that you can see where areas of potential where the market could come back and test to, okay? And these exposed virgin value areas that are just left here that the next bar doesn't come back in the next bar, often you're going to see the markets eventually come back and test those levels. And then when we come back and test those levels, can't get into it, then you start seeing the exhaustion prints, then it's very clear what's happening, right? Because if you're just looking at candlesticks, you're thinking, oh, I got my nice hammer candlestick here, I'm going to get long. Well, I know that I have resistance right here. And what happened to your long? It stopped right at that resistance and then sold off. Okay, so while you got a bullish indicator just off the candlestick alone, I know I got resistance here, and which one won, the candlestick or the resistance? Based off the order flow, the resistance won. Right, then I'm seeing signs in the order flow that's telling me it's still bearish, and then you had a nice sell off there. There's another example from yesterday, right? Market sold off, rallied up, sold off again. Why? Right, as a trader, you always want to be knowing why. Now we got to the low of the day down there at what was that, 52 and a quarter. Traded two lots. Now there's other things here in the order flow as well, right? You have a delta divergence. But I know there's price rejection down here based off the volume that's traded, right? The two, it's highlighted there. I got positive delta on the low, so it's telling me buyers are stepping in. Okay, but why all of a sudden buyers are stepping in right at this level, right? That's what you want to know. Well, when you start adding sort of another layer of order flow, okay, and you're looking at the value areas, okay, because we did have a gap between this bar here and this bar going into these new lows as you made the new low, because the low was previously here at 53, and we sold off another 3 ticks. And then we gapped up, right, between this bar and this bar in the value areas. Rallied all the way up from that low of 52 all the way up to 65. Then we gap here and we sell off again. Okay, so add another layer of analysis. Add the value areas that are untested. And as you're coming into these lows here from earlier in the day, I think it was the previous day, we came down into this area in here. You see these zones here? These were virgin value areas from much earlier times. Okay, so I know that we ripped from these levels earlier, so I'm looking to see if that buying is going to come in again, and it came in, right? As it came down into these areas where you have these until tested value areas, right? These value areas that hadn't been tested before. Now the market's selling off, coming down in here. I'm looking to see what's happening in the order flow. Okay, you come right in it. We hit the top level here, and there's hardly any volume. I mean, the first time you trade 21, second time 2, and then the market jumped from this 52 and a quarter area all the way up to 65. And lo and behold, up here at 65, what do you got? You got a value area that's kicking off because the next bar went inside to test it, or the next bar, right? It's still below that, right? And as you saw on the chart, right, we sold off from this. This is it right here, this value area coming out of this bar, from 62, 63, all the way back down into the 50s. All right, so that's how order flow can really, really help you by showing you these areas that need to be tested, right? And here's a 5-minute chart. Okay, again, yesterday, this is just going into the close. Simple. I have this value area here. Okay, next bar went up, right? We traded all the way up from, what was that, 61, all the way up to 76, came right back down, hit the high of that value area right here. Went into it by a couple of ticks. This is like what, 62? 62, shot all the way up into the 70s. Okay, came back down, put in another value area that's hasn't been tested. Now this value area here, all right, you had a value area, but it was tested. It came right into it. All right, in the next bar, because you're looking really for those bars where it's hasn't been tested in the next bar or the next bar, right? You're looking for when it comes back in and tests it. So you have one here, this bullish one, market went up, 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 came right down into it right before the cash close, traded into that area. This time the pullback was a little deeper. Here it was only pulling in a couple of ticks. Here pulled in about 2 points. Again, but you're talking an area from around 58 down to 57, and then it went all the way back up to 77. So you got a buying opportunity here, buying opportunity here. Where's your stop? Just on the other side of this zone. On the wider value areas like this, where's your stop? Your stop's going to be, obviously worst case scenario is on the other side of the zone, but on these wider zones, it should go with the point of control first. Okay, so you're getting long from here. Your first stop is here. And your second stop is here. This might be your mental stop. This one is your hard stop. Okay, so if it's, again, that would only apply if it's a wider zone like this. This one's a small zone. So I just use the whole value area. So hopefully you can see that using order flow is really like cracking open that oyster, right, and finding that pearl. You're going to see things that no one else sees. Right? You're going to see things happening in the market that other traders are just not seeing, right? They're just looking at the oyster shell closed, but you've opened it up and you're looking inside and you got the nice pearl, right? That's really what you want to do, is take advantage of that. All that information that is available to you, right? The exchange puts it out. This is just plain level 1 data, right? You don't need level 2 data unless you're looking at the depth of market, but order flow, top level data, level 1. You don't need to go anything deeper unless you want to look at the depth of the market, um, for your own purposes. But for an order flow footprint chart, not needed. So over the last 40 minutes or so, hopefully you'll agree it's been time well spent. Now, I can't cover everything in a quick training session. I wish I could, but it's just not possible. There's just so many different exciting things about order flow that, for some traders, the first time they learn these things, it's just like, they had no idea. It's just like, oh my gosh, it's amazing, right? I mean, I don't want to oversell it, but it's one of those things that now you can finally understand what's happening in the markets, right? But a lot of times nothing's happening in the market, right? A lot of markets exist to facilitate trade between parties, right? Hedging their risks, things like that. But sometimes it's just super duper obvious that it's just what I call a slam dunk. All right, you could just see it developing. I know I've seen that happen over and over. I know what to do, and you do it, right? So I got a special offer for you, so you get everything you need to know about order flow. Okay, and I got a very special deal if you act today. So what it is, it's the Order Flows Trader. Actually, it's the Order Flows Trader 5.0, not 3.0, for NinjaTrader 8, and we've updated it about a month ago. There's now like 25 pre-programmed order flow tools that you could use, and some of the things I was showing you today, the value areas being drawn out, right? Those zones until tested. We have them on different forms of analysis. So you can draw out these different zones so you can see how the market's going to react when it comes back into it. And it's really like hooking up, a trading software to my brain, to your computer, looking at showing you the things that I would like to see in the order flow, telling you whether it's bullish or bearish, right? Because, at the end of the day, having order flow software is one thing, right? Again, you can get order flow software, for, I don't want to say free, but, minimal charges that just shows you the footprint, right? And then it just sort of leaves you out there to go and put it all together, right? And when I created the order flows trader software, I did it to make my trading easier, because there's a lot of little things I look for in the order flow, just like I showed you, right? The exhaustion print, something so minute, something so obvious that it's so obvious you tend to overlook it. Sometimes it's like I'm looking for something and it's just right in front of you, right? And if you don't know what to look for, you're going to miss it. But again, having software is one thing. You got to know how to use it. So I'm just going to give you the software and send you on your way with, a 5-page PDF download that just shows you, how to license it or whatever. I provide a lot of further education because, I want you to embrace order flow and really understand what it is that you're looking at so you become a better trader, right? That's why we're doing this is, so we could all become better traders. So if you act today, part of the bonus is the order flow trading course, which I created. And normally I sell this for $297. There's 20 lessons in there. You're going to get it for free, okay? Which again is a great deal because you're saving money, right? I mean, at the end of the day, people think, oh, I got to get the fastest computer, I got to get this, I got to get that, and then they look at add up everything they want to get for to begin trading, and next thing they know, they're $5,000 in the hole before they even put money in a trading account. That's why I want you to get all the education as well as just software. So you can get the order flows trading course, but you also going to get this video series that I did for my inner circle. There's 56 videos on advanced order flow analysis, tips, etc. And the only way you can get that now is through this offer. Yeah, I don't offer this for sale anymore. It's in the vault. You can only get it through this offer. So, the software, the training, the extra videos is already $1,600. Okay, almost $1,700, but you're not going to worry, you're not going to pay that today because when I created the Order Flows Trader software, right, I used to, do mentoring and things like that for people. And I still get offers. People say, hey, just tell me how much you want and, for your time and we'll do something that's, you know what? I do this weekly session for users of the software, right? And it's Tuesday. Today's Tuesday, so I have it tonight at 7 p.m. Central Time for users. It's a live session where I talk about things I saw in the order flow, over the last week or so, and how to use the software. If you got questions about the software, if you got questions about a trade, you could ask me in this room. It's a live session. It's kind of like an ask me anything, but usually it's just me lecturing because people are like, okay, what do you got for me today? And, they just want to sit back and learn. But I do get questions in there. And I've been doing this for over 3 years, right? We've got over 157 episodes. Obviously, I take holidays off like Christmas and New Year's, Thanksgiving week and stuff like that. But it's 157 episodes on this weekly training session, and a lot of extra gurus out there. They want to charge you extra to teach you how to use their software, which should be free. So again, sometimes people say, "Oh, Mike, I can't reach you. I know you're busy, etc." Well, every Tuesday, 7 p.m., I'm in this room. You're free to ask whatever you want. Michael, I got a new computer. I'm going to change my license token. Can you do that? Simple, done. I'm there. So you can't say, well, you didn't answer my email. If you ever the user and you have any question, I'm always there every week, right? So I can be reached there. This is for customers. Now, what I discussed today is just a sample of the forms of analysis that I talk about weekly. Okay, what's available in the Inner Circle video series as well. But you're going to learn more about order flow in the weekly sessions than you thought possible. You're going to learn more in these weekly sessions than going through courses, et cetera, because you're going to see it and explain. And if you have a question, you could ask it. Okay, so add that all up, it's close to already $2,000, but it's just a one-time payment of $749. No recurring payments. I see these people they charge, oh, I'm going to charge you $299 a month forever. You try to cancel your credit card, it's still getting charged because now it's linked to your bank account, right? I hate that. I got these Apple Music subscriptions that I'm paying for. I don't know what the hell they are, anymore. I just see them come up on my credit card, $9.99 Apple Music. Um, doesn't say what, but I hate that. So I don't want you to go through that either. It's just a one-time payment, $749. Go to orderflows.com/oft5.html. Now, obviously, you will need to pay data fees if you're trading real time. You need a real-time data feed and any NinjaTrader fees that come with it. Um, the software will run, it runs on NinjaTrader 8. It runs on the free version as well as the paid version. If you're going to trade through NinjaTrader brokerage or one of their recommended brokers, get the paid version. It will pay off for itself over time. So go to Orderflows Trader, or sorry, orderflows.com/oft5.html. Takes you to this page, right? You see the link up here, orderflows.com oft5.html. Scroll down. Now you can read all about the Order Flows Trader software there. I do suggest you take some time to read. Just click this button right here. Click to buy now to get started, right? It takes you to PayPal. PayPal processes your payment. I don't get your credit card information. I don't want it. You know, I got enough stuff going on. And after your payment is processed, it can take up to, you know, a couple hours for everything to get processed, because there's, you know, you're getting access to trading courses as well. So, you know, the license tokens, your logins for the courses, et cetera, it's going to be sent to your registered PayPal email address. So whatever email you use for PayPal is the one that you're going to get it sent to. And again, it's just a one-time payment of $7.49. So go to orderflows.com/oft5.html. Now, special bonus for you guys today, with Investors Expos. You know, I appreciate everything Anna does for me, and you know, especially in this time, it's a very trying time with everything going on in the world. Give you access to the order flow playbook, okay, which is a course that I did on order flow, right? And there's 11 additional trade setups in there that you will learn that you can apply to trading order flow. Normally it's $297. You're going to get it for free today. So to get started, just go to orderflows.com/oft5.html, and you're going to get the Order Flows Trader software. You're going to get the Order Flow Trading course. You're going to get the Order Flow Inner Circle video series. You're going to get access to the live training each week, as well as, if you can't attend, you can watch the replays. Or, you know, if you want to, I don't suggest people watch 157 episodes, but, you know, if you're ever bored and you want to go through, you could go through all the previous episodes. And you're also going to get access to the order flow playbook. Okay. So you're getting a lot of value that you're just not going to find anywhere. I mean, it's really the education that you're getting is actually more than the software, right? And I know people that have bought this package just because they want to get the education, right? Not so much the order flows trader software, because they're already using a different order flow software, right? So, you know, you can't lose with this. And again, it's just a one-time payment. Now, if you want to get my book, go to orderflows.com/booked.html, and you got to enter your name and email address, and it'll take you to the download page where you can download it. Okay, so again, get started very easy. There's the link right there. I've put it in the chat. Let me just make sure it's in the chat here. Now, you know, a question that I get a lot is from people is, well, what if I do nothing? Am I going to learn? Well, yeah, you can learn. You could watch videos. You could do nothing right now, and a year from now, you'll be like, oh my gosh, where was I a year ago? You know, COVID hit 2 years ago, right? A lot of people got interested in trading, but they didn't get the proper education. And in the end, right now, they're finding out markets just don't always go up, right? Market conditions change, and you know, they're suffering for it. Now, you can try and take what I teach you here today, go out there, see if you can do it on your own. Okay, maybe, you know, trial and error for the next few months, and perhaps if you're lucky, you start to see some positive results. And you know, the ones that are successful in that way, by, you know, spending time watching videos, YouTube videos, jumping around, they already have some sort of background in trading. But if you're relatively new to trading and new to order flow, you really want to start at the best point possible, right? You know, let me take you by the hand and walk you through step by step each part of the process. Skip that trial and error stuff. Do the work, and you're going to watch as your life and trading transform right before your eyes. So which option is better for you, right? Try and do it on your own, do nothing, or let a professional, someone that's traded professionally at very high levels, right? Big trading firms, investment banks, teach you. So get started. Go to orderflows.com/oft5.html, And on that, I will end it for today, guys. Thanks for taking the time out of your day. And again, I realize a lot of us now sort of going back to the having to go back to offices for certain people, and it's not all about just sitting at home doing things, right? So if you want to make a change in your life, the best way to do it is get that solid education in trading and go from there. So thanks everybody. Have a great weekend, or sorry, great rest of the week, and have a great weekend ahead. Thank you, and bye bye.